Have you ever heard the saying? A billionaire would unbother picking up $100 bill from the ground because they earn more money just by standing still. It sounds a bit arrogant, doesn't it? But here's the thing, it's closer to the truth than you might think. Billionaires don't earn money the way most people do. They don't grind for paychecks or wait for annual bonuses. Their wealth doesn't come from working harder, it comes from owning smarter. Most of us are taught to believe that wealth is all about income. You get a job, you get paid, and if you're lucky, you get a raise. That's the entire financial world for most people. But for the ultra-wealthy, income is actually a problem. Why? Because income is taxed, and it's taxed heavily. In the United States, the highest earners can lose up to 37% of their salary to federal taxes. So, what do the rich do? They simply avoid income altogether. Think about it. People like Elon Musk, Jeff Bezos, and Mark Zuckerberg have famously paid themselves tiny salaries, sometimes just $1 a year, or even nothing. Instead, they get paid in equity shares in their own companies that grow in value over time. They don't sell those shares, so they don't get taxed on the growth. Their money works for them quietly, compounding behind the scenes, while the taxman waits for a sale that never comes. This brings us to the power of assets. When you buy something that increases in value, that's an asset. It could be a company, a building, a piece of land, or even a portfolio of stocks. Let's say you buy a house for $100,000, and over the years, its value skyrockets to $1 million. On paper, you're a millionaire. But here's the crucial part. You don't any tax on that $900,000 gain until you sell the house. That's called an unrealized gain. The rich understand this rule inside and out. So, they never sell. They let their wealth grow silently, compounding year after year, completely untouched by the tax system. Now, let's talk about debt. When most people take out a loan, it's for a mortgage, a car, or student loans. They're going into debt to consume. And here's the trap. They have to pay the interest on that debt with their after-tax income. Months stay repaying taxes on their salary, and then using what's left to pay interest to a bank. It's a double whammy that keeps people working for decades just to stay afloat. This is the consumer debt trap. But the rich, they flip this game on its head. They borrow money too, but not against their labor. They borrow against their assets. And you better believe the banks love lending to them. So, how does this all work? It's a simple three-phase strategy. Phase 1 is buy. The rich start by buying things that grow in value over time. Stocks, real estate, entire companies, or valuable intellectual property. The key is they almost never sell these core assets. They let time and the market do their magic, growing their wealth exponentially without ever triggering a tax event. $1 million stock portfolio turning into $5 million. No taxes are due as long as they don't sell. Once their assets have grown significantly, they move to phase 2. Borrow. They walk into a bank and say, I own these assets now worth millions, and I don't want to sell them, but I need some cash. The bank is more than happy to give them a loan, often at a very low interest rate, like 2 or 3%. Why? Because these borrowers are extremely low risk. Their massive asset portfolio serves as collateral, so they use this borrowed money to live their lives, invest in new ventures, buy jets, or fund their next big idea. And the most brilliant part, none of that loan money counts as income, so it's completely tax-free. They are literally borrowing money tax-free while their original assets continue to grow in value. They're getting richer even while they're spending. Finally, we get to phase 3. Die. I know it sounds grim, but for wealth, it's a magical moment. When they pass away, a legal loophole called the step-up in basis comes into play. Their children, or heirs, inherit all of the assets, but the tax cost basis resets to the fair market value at the time of death. Remember that stock portfolio that grew from $1 million to $10 million? The heirs now inherit it as if they bought it for $10 million. All that previous capital gain is wiped clean from a tax perspective. Any outstanding loans are often paid off by life insurance policies designed for this exact purpose. The family can then continue the cycle, growing the wealth for generations, all without it ever being significantly taxed. This is the real secret to how wealth is maintained and grown. It's the hidden game called buy, borrow, die. Own assets that appreciate, borrow against them smartly to live tax-free, and let time and the tax code make your family wealthy for generations. Because in the end, if you own the right things, the system is designed to work for you. If you own nothing, you'll spend your life working for the system. Thank you so much for watching. If you found this insightful, please hit that like button and subscribe for more content that breaks down the world of finance. See you in the next video.